Breaking news tonight for every pensioner across the UK. A shocking and unexpected financial deduction has just been confirmed by HMRC. Yes, you heard that right. Starting this October, thousands of pensioners could see £300 suddenly disappear from their pension payments. Many are waking up to smaller deposits, and confusion is spreading fast across Britain. This isn't a rumour, it's official. HMRC has announced a £300 pension deduction scheme starting from October 15, 2025, and it's already causing panic among retirees who depend on every pound to cover their bills, rent, and daily essentials. But what's really behind this £300 cut? Why is it happening now? And, most importantly, how can you protect your income before it's too late? Welcome to Pensioners Power, your trusted source for everything you need to know about pensions, retirement planning, and financial wellness. Here, we cover the latest news, expert insights, and essential updates to help you maximize your retirement years. Whether it's understanding pension schemes, making the most of your savings, or staying informed about financial changes, you're in the right place. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an important update. Now, let's jump right into today's topic. It started quietly earlier this year when HMRC launched a deep internal audit, a behind-the-scenes review of pension and tax records stretching back to 2022. During this audit, officials uncovered thousands of discrepancies, overpayments, outdated tax codes, and cases where pensioners were misclassified due to legacy system errors. Instead of waiting for the next tax cycle, HMRC decided to act fast. The result? A standard £300 deduction applied directly to affected pensioners' income, a one-size-fits-all correction meant to recover these overpaid amounts. But here's the issue: most pensioners had no idea they were overpaid in the first place. Many never received a letter, a warning, or any kind of notice. Now, as the deductions quietly begin, thousands of retirees are left wondering what on earth happened to their hard-earned pension. You might be asking, why specifically £300? Insiders at HMRC describe it as a standard recovery figure, a round number chosen to simplify corrections across multiple systems. Rather than calculating individual repayment plans for each case, HMRC set £300 as a default adjustment amount during the reconciliation process. However, experts argue this blanket approach unfairly penalizes pensioners, especially those who've done nothing wrong. For some, it could mean losing a week's worth of groceries or falling short on energy bills just as winter begins. Now, let's talk about who this actually affects. Not all pensioners will experience the deduction, but those most at risk include anyone who receives both a state pension and a private or occupational pension, pensioners whose tax codes were recently updated or changed, those who receive DWP benefits, such as pension credit or attendance allowance, alongside taxable income, pensioners with untaxed savings interest or investment income that wasn't declared in full. HMRC has confirmed it's cross-checking data between its own tax system, the DWP, and private pension schemes. That means, if your records don't perfectly match, your name could already be flagged for deduction, even if you've never received a warning. This new digital cross-referencing system automatically identifies potential underreporting or overpayment cases. In other words, the system decides, not a human officer, and deductions can be triggered automatically. Mark your calendars. The key date is October 15, 2025. That's when HMRC's new deduction mechanism officially goes live. From that day onwards, any pensioner identified as having a discrepancy will see adjustments made directly through their pension payments. No separate letters, no waiting period, no appeals in advance. The government claims this is part of a fiscal realignment strategy, a move to recover overpaid funds quickly and improve tax compliance efficiency. But critics say the rollout is dangerously abrupt and leaves pensioners completely unprepared. For those living on fixed incomes, this could mean real hardship, less money for heating, food, or even rent. Advocacy groups are already calling this the most controversial HMRC action of the year. So what does HMRC say? When questioned by journalists, an HMRC spokesperson stated, "This is not a penalty or a fine. It's a standard correction required under the Taxes Management Act to recover previously overpaid amounts." In plain terms, HMRC insists they're just fixing a past mistake. But pensioners are asking, whose mistake was it? If system errors cause these overpayments, why should retirees be the ones paying for it now? Critics say the real issue isn't the deduction, it's the lack of transparency. Many pensioners received no formal notice, no email, and no breakdown of what caused the alleged overpayment. For many, the first sign will simply be a smaller deposit in their account this October. The Department for Work and Pensions, or DWP, is working hand in hand with HMRC on this scheme. Their systems have been linked to ensure deductions are accurately coordinated. But this coordination also brings a new risk: dual deductions. If you receive both state pension and pension credit, or another benefit, both payments could be affected simultaneously. The DWP says safeguards are in place, but pension advocacy groups warn that vulnerable pensioners, especially those already struggling, could face compounding cuts. If you're a UK pensioner, don't wait for the £300 deduction to appear. Take action now. Here's what you should do before the October 15 deadline. Check your pension payment statements, look for any reductions or discrepancies. Log into your HMRC online account and review your current tax code. Request a P800 tax calculation notice from HMRC to verify whether you have any unpaid balance or overpayment record. Contact the HMRC helpline immediately. If you're unsure, do not ignore any letters or emails from HMRC or DWP, even if they look routine. If you spot an issue, you can still appeal or request a payment deferral. HMRC has stated that pensioners facing financial hardship can spread repayments over several months instead of one lump sum deduction. Here are some of the most common mistakes that could make the situation worse. Ignoring official correspondence. Some pensioners mistake HMRC letters for scams. Failing to update your tax code after changes in income. Reporting pension income twice, leading to false overpayment alerts. Not keeping written proof of your calls, letters, or online messages with HMRC. Yes, scams are common, but official HMRC communications always come from gov.uk domains. Always verify, but never ignore. If the £300 deduction has already happened, don't panic. You have rights. Pensioners can appeal within 30 days of the deduction appearing. If HMRC confirms the deduction was made in error, you are legally entitled to a refund. Even if you do owe money, you can request a repayment plan to spread the cost. The key is to act quickly. Keep every email, letter, and reference number. Documentation is your strongest protection. This £300 deduction is more than just a single financial adjustment. It signals a new era of real-time enforcement by HMRC. The government is now relying on automatic data matching, digital compliance systems, and AI-driven cross-checking between HMRC, DWP, and pension providers. That means from now on, even minor inconsistencies, like an unreported interest payment or an old tax code, could trigger automatic deductions. For pensioners, it's never been more important to stay alert. Check your bank, review your tax code, and keep all your records up to date. Thank you for watching Pensioners Power. If you found this video helpful, be sure to give it a thumbs up and share it with others. Stay informed, stay engaged, and we'll see you in the next video with more insights on the issues that affect the UK. Take care, and don't forget to subscribe to my channel for all the latest updates.